Hey everybody, how you doing? This is Roberto Paredes, RP Home Group at Keller Williams Realty, and I wanted to take advantage of this time in order to stop and appreciate people in our business that make my job a lot easier and provide a high level of service to my clients. So today we're going to be talking to my go-to lender, the person that I recommend to people 99% of the time, and that is Marty Brooks with Atlantic Trust Mortgage. Say hi, Marty.
Hey guys. Sorry,
So,
that's my cue.
that's your cue, Marty. So what I wanted to do is really just ask a few questions and go over what's going on in the mortgage industry right now with everything going on right now. So Marty, what are you seeing? How is this affecting the mortgage industry right now?
Well, there's a lot of uncertainty going on, as everybody understands. The rates, we can get into rates in a minute, but obviously the rates are very unpredictable right now. A lot of that has directly to do with just the uncertainty in the market, investors being scared. There's really no rhyme to the reason. We can get into some of the other things in a minute, like the Fed and, people are wondering how that affected the rates and stuff. But just in general, everything's a little haywire right now. You are seeing some lenders, non-banks, maybe lenders that depend on like a larger investor or warehouse lines, tightening up some restrictions and stuff due to some of the uncertainty in the market and risky investments. I think lenders that are bank owned are a little bit more stable in this environment, but there definitely is a lot of uncertainty right now. Lenders are also backed up due to the refinance boom that hit, over the last few months,
Right.
what caused rates to really bump up a couple of weeks ago, because they really hit an influx of volume. But I would say the biggest way that everything is affected right now is just the uncertainty, and new data is coming out all the time with how the market may be affected by things. So,
Right. Okay. Well, a couple of weeks ago, maybe a week ago, the Fed dropped this interest rate to 0. And when that happened, I got a bunch of text messages from clients, past customers, just saying, "Hey, how can I take advantage of this opportunity?" And they realized that they couldn't get a 0 interest rate, obviously.
right.
But how did you? How does that necessarily affect the mortgage industry when the Fed lowers to 0?
Yeah. The Fed rate can indirectly affect the mortgage industry, but the interest rates are not tied to the Fed rate at all, really. So the rate going to 0 does not have a direct impact on mortgage rates. What the Fed rate is the overnight rate that banks lend to other banks. It's basically the cost of doing business. It can obviously stimulate the economy and help things in that way, but as far as mortgage rates, they don't correlate directly with that. Rates that are affected by the Fed rate would be maybe credit cards, stuff like that are tied to that rate. The mortgage rates aren't. What the mortgage rate is tied to is the treasury bonds, and like the 10-year treasury bond, because those are more long-term stable bonds. Mortgages are also long-term investments, so they mirror more the treasury bond than anything else.
Okay.
So when the government announced, well, let me backtrack. So rates went up whenever the influx of refinances came in, and really hit kind of ahead a couple of weeks ago. We saw a real big move in the market. Then they dipped back down a little bit, and everybody thought when the Fed rate came out, the general public thought, oh, that's going to really lower rates. Well, we saw rates move back up again last week. Part of that, I think, is due to the uncertainty in the market, but also the Fed or the government had said they were going to, a lot of the easing into the economy is be basically releasing more treasury bills, which creates more available treasury bills in the market, treasury bonds, which creates lower demand, which actually can raise interest rates. Well, recently now the government has said they're going to actually buy back bonds, and they're also going to buy mortgage-backed securities. So we saw rates come back down at the beginning of this week. So that's really some of the things that affect the mortgage market the most, of how mortgage-backed securities, especially if the government agrees to buy them, if the government is going to buy more treasury bonds, they're going to release more treasury bonds into the market for available purchase. And then just the treasury yield and where the treasury rates are. That's what's going to affect interest rates more directly.
Okay.
We're seeing though, go ahead, sorry.
Oh, so based on, short term within the last week or so, yesterday or whatnot, are you seeing anything change, anything leaning towards one way or the other?
I think in everything when reading stuff, it's trying to predict where the market is going to go would kind of be a foolish game right now, just because of all of the uncertainty in the market with state shutdowns. Every day we seem to have new information coming out about there's going to be a new status quo in place. And I think a lot of investors get skittish, are selling mortgage-backed securities to go into cash, but then you also see we'll have an influx of buying. Like when the government says they're going to buy mortgage-backed securities, then you see more investors come back in and buy it. We did see, like I said, the rates decrease this week. Hopefully we'll get some stability, but I think we're going to see a lot of ebb and flow just due to the uncertainty in the market, where people, where investors are going to buy and sell at a rapid pace. So you're going to see a lot of ups and downs until we get through this whole, coronavirus situation that we're in right now, and the economy gets back on track. Trying to predict exactly where things are going to go, I think, would be futile, but they are pretty low right now. I mean, today, when they came out, we're at about 3.5 right now on a 30-year fixed, conventional. So, I mean, rates are still pretty solid right now, and hopefully we will still stay in that range, but there's really no way to know exactly what's going to happen. It just depends on what the government does, what the overall market does, and just what kind of news comes out related to this whole, situation that we're in, basically. So.
All right. So really it's just day by day, just kind of depending on which way the news is going, I guess you could say. However, interest rates are still historically low.
Right.
And so, it would be a good time to buy if that's a must for you right now. So let's talk about refinancing. So there's people that I helped many years ago buy houses, and they've been calling up. Not everybody is like refinancing isn't for everybody. I guess what I'm trying to say right now. So who would be like the perfect person? What would be, and obvious, what would be the perfect scenario for someone that that would benefit from refinancing in this low interest rate?
Well, I mean, there's several different reasons to refinance. Obviously, getting cash out for someone that wants to make, for getting just lowering the payment. There's the section or the sector person that wants to, people that want to
get equity out of their house, right?
Yeah. They want to take money out, consolidate debt, or do home improvements. That person is not going to be as concerned about saving. Obviously, you want to get the lowest rate possible. That person is not going to be as concerned though about lowering payment. They've got a different motivation for pulling the money out. For the person that just wants to to refinance a lower payment, there's not a magic number, but anybody that purchased in the last few years, I would say at least, let's just say someone that purchased over 2 years ago are almost definitely going to be at a lower rate than they were then, even if they purchased last year. But there's also they need to have enough equity in the home to make it worth it. You are going to add some closing costs back on that too. But anyone right now that can get, let's say, a full point below where they were at, especially if they built equity, they might have been on an FHA loan and now they can go into a conventional loan. Well, 2 or 3 years ago, they still might have been in the 4s on an FHA loan. They can turn around and maybe refinance a conventional loan at a full point below that and remove the mortgage insurance.
Wow,
so,
that'd be huge savings, right?
Right. I mean, I look at them, how much monthly payment they're going to save and how long it's going to take to recoup the closing costs as well. So to me, anyone saving a minimum of at least $150 or so a month, I think could be worth it, especially removing mortgage insurance. If you're lowering the rate and payment and also removing mortgage insurance, you're putting a big savings in their pocket.
Yeah.
If someone just bought recently in the last year or so, and we are seeing some people refinance fairly quickly, like VA streamline refinances, but you're not going to have as much equity, especially on a home where you didn't put much of a down payment, and you are going to be adding back to the balance. So there may be scenarios where they're not able to refinance, maybe on a conventional or even an FHA streamline, to where they don't have enough equity in there to do it, or it may not even make sense because they're not going to save quite enough money. But the biggest thing would be a conventional loan where they're removing MI, lowering their rate. You can really have an impact on savings. So it's really going to be different on case by case.
Okay. So ideally, if you've got when you purchase, you put down less than 20% and you have mortgage insurance, right?
Correct.
And you've owned for at least a year. So it would not be a waste of time for them to reach out to you, correct?
Exactly. Yeah, I would say the minimum we want to say at least to be a year. But anything less than that probably would not make much sense. We can still look at it, but if you purchased over a year ago and feel like your rate is going to be higher than where you were at, I would say a minimum with at least a half point, then it would be worth looking into.
Okay. All right. Well, I think it's definitely worth your time, people. So what I'm going to do on this post, we'll add Marty's contact information and a link. That way you can put in your information. and then he can let you know if it's worth your while. Marty, as usual, love talking to you, buddy. Thank you for the value that you've been able to give to the people watching. And if you're interested in buying and you need somebody that's trustworthy, does a good job, is going to work hard for you, Marty Brooks has my I co-sign him 100%. He's somebody that I definitely trust with all my clients. If I'm buying a house today, I'm using him. So please reach out to him if you're thinking about refinancing or purchasing. Marty, thanks a lot, bud. Look forward to hopefully seeing you in person soon. Take care.
All right. Yeah, thank you. Thanks for having me. I appreciate it.
All right, brother.